The Taiwanese markets up in about 0.7% gains.
China overall, it's definitely positive. I think it's positive for global markets overall.
Nifty holding tight above that 18,000 mark.
We've gone a little cautious and conservative at this point of time. We just want to take a step back and understand this setup better before we can actually take a call for the next 1 to 3 months.
There was a fire which occurred in a block of an API manufacturing Unit 3 plant in Visakhapatnam. The operations in the other production blocks are running as per normal.
Need-based shopping is happening, but other than that, the aspirational levels are not getting met because there is a stress in the customer's pocket.
The pain started with a sustained sell-off in cryptos. For the current year, the prices have declined sharply, down by 60% for Bitcoin. Ethereum is down 64%. Decentralized Mana is negative 88%.
From the lows, there has been a recovery of 80 points, but we're still about 80 points away from our all-time high level.
This particular subsidiary would be manufacturing graphite anodes as far as the company's foray into the lithium ion cell business is concerned.
The country's National Health Commission has announced it'll scrap the quarantine requirements for inbound travellers from January the 8th of next year.
Nifty has picked up some pace, so now it's up around 50-odd points.
Well, that was the day so far. You're with us here on Closing Bell. With me, my colleagues Rima and Mangalam. I was hoping that we will open with a 100-point gain on the Nifty, but as we are getting into Closing Bell, some of the gains have peeled back 20-25 points off, and it's up 80 points. But still, I mean, this is a good session, guys, after the very strong, forceful bounce that we saw yesterday. So, you know, a good follow-through, absolutely. Market breadth has been positive, 4:1 in favor of advances. That is another one which is looking solid. Metals index is up 4%. I mean, 3.6, between 3.6 and 4. Stocks are up between 5 and 7%. The China reopening, big measures announced late yesterday evening. I think that's the one which is rubbing off in the metals sector. We put this out in market laser in the morning. FMCG is the only sectoral index which is actually down. That's the only one. I mean, you can count healthcare, which is not doing very much, absolutely flat, but not beyond that. Nifty resistance at practically at the day's high. So, you know, what we put out in the morning this morning was 18,130, 18,140, which is nothing but the 38% retracement of the Feb 14th high to the fall that we saw, to the low that we saw yesterday. That is 18,130, and the market practically turned exactly from there. The high today, 18,134. So those are resistance levels to watch out for. Bank Nifty also, reversing around from where the resistance is, which is 42,860. The high today, I think, was about 60 point. There was a 60-point breach of that level. But I don't know, 42,000 index, that's hardly anything. And then the market, the Bank Nifty is also reversed a little bit from the high point. So 42,860, I think, is the first one to take out. Then you got other bigger retracements, which is 43,165. So that's a quick note. It's a decent kind of session that we have on our hands, especially in the broader markets. Rima, hi.
Hi, you know what's interesting? I was chatting with someone in the markets and he said the futures and options volumes today, as of 2:15, are higher than what we had yesterday and even on Friday when we had the brutal sell-off. So today's rebound basically is coming in on pretty decent volumes, at least on the futures and options side. The cash volumes anyway are dry and no one looks at the cash volumes that much, considering the activity is now shifted to the F&O space. But IT started doing pretty well. You know, IT opened flat, pretty muted, but since then there has been a sustainable intraday recovery in the Nifty IT space. There you have it. It's a steady sloping upward chart, up 1% right now. Individual names in the frontline space is Infosys, which is looking strong, L&T Technology, First Source, couple of the other stocks where you are seeing strength. The Nifty as we speak is off from the day's high. The Nifty intraday high was 18,134 and a level to watch will be the 50-day moving average at 18,200. Mangalam.
That's correct, you know, and there are a couple of reasons why perhaps the futures and options volumes are higher today than they were yesterday and on Friday as well. The big factor is that we are closer to expiry, so obviously we're T-2 as far as the expiry is concerned. The December series expiry is on this Thursday itself, so a lot of rollover positions picking up from yesterday and Friday. That's one, and the second one, it is a Tuesday. So Tuesday, second half, usually we have volumes picking up on account of the weekly options expiry on the Fin Nifty. So those are a couple of factors that may explain the volume build-up in the F&O action or the F&O side of things. But as far as the markets are concerned, we've been meandering between the lows and the highs of the day, with both incidentally were made in the first hour of trade itself. And the indices that are doing well, it's the metals and the IT pack, like you pointed out. But the indices that are underperforming today are the Nifty, Bank, as well as the FMCG index, both of them under a tad bit of pressure. But what's happened today is that with the Nifty stabilizing between this range, it's given option writers a range to work with for the premium that they want to eat. 18,000 put continues to see a fair amount of writing, so that's added almost 50-60 lakh shares in open interest. 18,100 put as well, as the market moves closer, has added almost 40 lakh shares in open interest as well. A combined premium of that tells you that today's low of 17,967 or 17,950 to around 18,000 becomes an important support for the bulls, whereas bears aren't giving up the fight on 18,150 to 18,200, which again is today's high, and the 50-day moving average, the 20-day moving average rather, on the Nifty that you spoke about. In terms of Fin Nifty, it is the options expiry today, so after 3 p.m. I'll be looking at HDFC Bank, HDFC Limited, ICICI Bank, along with Bajaj Twins, which is Bajaj Finserv and Bajaj Finance, because these 5 stocks together have the majority of the weight on the Fin Nifty index. So if anyone's looking for any volatile moves in the last hour on that index, it would come through via these stocks itself.
Interesting. Let's tell our viewers then what we've lined up for them on closing bell this Tuesday afternoon. Metal stocks are the biggest gainers in today's trade. What has helped the up move? Details coming up on the show. We'll track the market technicals with Jay Bala of cashthechaos.com. And finally, we'll be joined by our alpha manager for the day, Ajay Vora of Nuvama Asset Management.
Okay, so that's the lineup here. But what should you do now in the last hour of trade? That's a question. Mitesh is going to answer that for you as always. Mitesh, hi, afternoon. So a little bit of pullback from the high point. Any fresh trades, or what would you tell viewers how to modify existing positions that they may be running?
Good afternoon, Prashant. See, I think one, when we were falling, we had talked about a trend line which was in force on the Nifty, and that started from June. And the pullback of the trend line happens around 18,200, 15,220 mark. And that's where a couple of important averages are placed. So, I'm still waiting for 18,200 to 20 to possibly go aggressively short in the market. So I haven't taken the index trade. My belief is that this pullback from the oversold levels could have the strength to go there, which is another about 100 odd points higher from here. That apart, I think trading is stock specific, and something which is very important is the Nifty metal pack. I think that's given a very, very strong reversal. So I have Hindalco as a buy call, keep a stop below 460, look for targets of 485. And on the sell side is IGL. That's a sell with a stop at about 420 for targets of 400.
Right, Mitesh, thanks a lot for that. I was wondering if you'd have a call on the metals pack, etc. or not, but we'll come to that in just a bit. Fundamentally, what's changed? Metals are in focus. In fact, that's the top gaining sector, and among the top gaining stocks on the Nifty itself, top 3, all of them belong to the metals pack. Manisha joins in with what's actually aiding the rally in the metal stocks. Manisha, is it China or something else as well?
Well, China clearly is on the top of it when it comes to metals. So while the reopening is ensuring that the demand is expected to pick up, remember when China opens up, the production also will pick up, because China matters 50% in sense of production and consumption of many of those metals. So market's still trying to see a balancing between this. Also because the metal prices have come off their highs of 2022, the expectations are that as the new year begins and as you see those weightages and resource allocations begin in the first week of January, a lot of this money could actually be going into metals, because the markets do expect that as we move forward from here, there is demand that could be coming in from China, but also from US and European Union, because infrastructure is going to be a major push there. It also has to do with the renewables, and many of these metals, mind you, are looking at much tighter inventories. We are looking at a second straight year of deficit in 2022, which could spill over in the next year as well. So every brokerage that I have spoken to say that copper is the metal to keep an eye on. The second on everybody's radar is aluminum. Here as well, there is power rationing that we have seen in Europe and in China that could actually impact the aluminum production going forward, and that could be supportive for this one. And the third metal that should be on your radar is zinc, where as well, if you look at the inventories in the global markets, are just about for 2 days of global consumption. So whether it has to do with the dollar index, which is off and just about trading at 104, Chinese demand, restocking, and the fact that you are looking at tighter inventories, all of that works in favor of metals going forward from here.
Manisha, thank you very much for that. Market expert Prakash Diwan is also with us on the show. Prakash, metals, is it just a trade for the next few days, weeks, Or is this something which could be sustainable as an uptrend to buy for 2023?
Good afternoon, Prima. So, to a large extent, I do agree, the kind of expectations that are building around China reopening is what's driving this. And remember, this is not something which is kind of a linear path that you would anticipate metals to try to follow. But I think it's more large of a global commodity play that's right now underway. And what's happening is that if China were to reopen, while the production will also kind of start coming up at some point in time, it's a huge consumption boom that is likely to be, unleashed of sorts. Because for 3 years, there's been a very strict lockdown and there's nothing much that's happened in terms of consumption. And while China is a huge exporter of consumption goods, it's also a huge consumer of those consumption goods as well. So, that's the kind of call. And there's some sort of murmurs that I'm hearing about the government looking at some sort of a relief for the metal sector in the budget. And typically how it happens as we get closer to the budget, you have these kind of anticipations built in. But if copper were to do well, which looks like, because you have a 3 lakh ton deficit for this year, and there's no indication that copper supplies could start moving in a better trajectory for next year. If copper was to do well, Dr. Copper always gives you a great indication where the Nifty is headed. So it's good news for equities as well, for larger, from the broader base equity market as well. So I think metals will probably outperform in parts for sure, but it's not going to be linear. It's not going to be a straight line move. You will have these hiccups. You will have these supply overhangs coming in. You have this pricing pressures that will start coming into the picture. Right now, you're not talking about any kind of price pressure, but I doubt if Indian companies would have that kind of pricing if Chinese production starts hitting the global market. So there are lots of ifs and buts, but it's good to be into the non-ferrous side. I mean, zinc, copper, so an Hindalco or a Vedanta probably in the portfolio might make more sense than a pure play Tata Steel or a JSW or JSPL at this point.
Yeah, no. That's a point well taken. 100 points, by the way, plus now again on the Nifty, 18,117. So that 25 point dip is all but gone. And this is back again at this stage. 6% on Tata Steel. These are big moves. By the way, I had S. Narain with me about a fortnight ago, and he'd made this point about, he, of course, loves to buy sectors which are down in the dumps and no one wants to buy. And he'd made this point that maybe there could be it's a fairly ignored kind of sector now, and this could be a place to buy on the back of this China reopening theme. Of course, he made it clear he does not expect anything like what we saw in 2021 in terms of returns, but fairly decent bounces possible.
This is the ownership is very low in the metal space.
Yeah, so ownership is low. Fund managers are not looking at general apathy, right? I mean, I think those are conditions which Narain loves, as we all know, as we all should love, actually. But for now, it's looking very, very decent for the metals index. By the way, market breadth is still going very strong. Prakash, PSU Bank says a trade seems to be back. I mean, the index was up 7% yesterday. Today, it's up another 1.5% or so. Any picks? They're still down quite a bit. They all lost between 20-25% in those 7-8 sessions. Anything you like here?
Yeah, I mean, I think, Prashant, it's very evident that, the trend that you have seen getting triggered sometime in September or probably even earlier in terms of re-rating for these banks is just far more secular, far more deep-seated, far more longer than just, a quarter or two. And in fact, the growth phase that you are seeing some of the largest banks get into, the frontliners like SBI and BOB and Can Bank, you have, a significant large tail in the PSU pack, which is also to participate in this whole up move of sorts, especially in the growth trajectory. I'm not talking about the stocks, but I'm talking about the business profile of most of these companies. And there's this huge impulse, though belated, for some of these smaller PSU banks to get into this digitization mode. I mean, you look at, the ads that are, and Mangalam sitting right next to you, he'll probably be able to vouch for this or point out what's working. There's a huge amount of digital push by most of these PSU banks on all platforms. I mean, the A&P spends that they're doing on launching their apps. Of course, as I said, it's belated. The ICICIs and Axis and HDFCs of the world have done it way back. but the smaller banks are participating in their own version of digitization, and which means that their engagement levels with clients, cross-selling ability, all of that will start kind of becoming much more balanced. That skew that you had between the larger PSU banks and the smaller is probably reducing. To answer your question specifically, I would still stick to the larger PSU banks. My favorite remains SBI because it's a play safe, sleep well kind of a thing. But from the smaller banks on the PSU side, if you were to look at something, smallish, not smallish as such, but Canara Bank is the one that's kind of got off the the starting line in a very decent way with the improvement in ROAs, and also if that is likely to be much more sustainable. So if you get a Canara Bank at lower levels, definitely it works. But look at also financials. Some of them were quasi, government owned, if I were to use that word, if not public sector completely, and they are transforming themselves in the housing finance, and also that's the other pocket that you could probably look at apart from PSU banks, if you feel that they've kind of already got priced in with all the goodness.
Prakash, I take that point on the ads, etc., primarily because if the belief is that the next leg of growth comes in from tier 2 and beyond, the penetration of PSU banks helps, and the advertising targets those from the unbanked space as well. But personally, what I like the most about PSU bank apps is that even if you open it between 12 and 2 p.m., the app works as against the PSU bank, which has a lunch break at that point. As we speak, however, we're seeing a big decline in a couple of these stocks in the broader markets. The battery stocks, we have Amara Raja, which has moved to the low point of trade. Alongside that, we have Exide as well, which has moved lower. Just wanted to know your thoughts on this space now, because ownership of vehicles is getting a lot more expensive. These guys have announced their EV plans, but we don't have anything formidable coming in yet. And add to that, if metal stocks are moving higher, belief that metal prices are moving higher, that would compress them or hurt their margins as well. So a triple whammy, so to say. I mean, what should a person do in a situation like this, looking at both Amara Raja and Exide?
So, very, very nice that you specifically picked this up because as a theme, batteries is probably the least understood, and there's this whole major glossing over that, all battery manufacturers are moving towards supporting EV vehicle ancillarization, and they are going to do well, which is not the case. In fact, it's going to be extremely difficult for the likes of Exide and Amara Raja to be able to cater to that new segment of lithium-ion batteries. The kind of battery management systems that you need, there's a huge amount of bandwidth that you need. They are so busy with managing their own bread and butter core businesses on the conventional batteries that becomes extremely difficult for them to innovate. So if you had to play batteries, I think the best play, according to my estimate in terms of what's been proven as a technology and adaptation, is a very small company called Cabra Extrusion. Now, Cabra Extrusion is much more than batteries, but it has one of the best pieces of battery, effective battery commercialization that you can probably see in India. There's a battery called the Batrix, which is an Austrian brand which they've collaborated with, and they've managed to be able to do that for a lot of two-wheelers, and once they get into that four-wheeler segment, it's going to be a very different ballgame. I mean, the scale-up is going to be very different, and there are lots of other players who are on the ancillarization of batteries itself. So I would look at that, but not these larger players. And Mangalam, there's another factor apart from those three that you mentioned. Most conventional battery players are also plagued with following what is called the EPR guidelines, and therein lies the huge cost burden of taking the batteries back from the scrap, which the batteries that are completely run down and scrapped. You need to have a system of collecting those batteries to be able to produce as many batteries. That's the new EPR guideline which is coming into force, which is fairly stringent, and recycling is a must. So all of that is going to be quite a bit of a challenge for the conventional players. They can't get their conventional business to slow down or to go down, and they still have to be part of the EV value chain, which is going to be very competitive. So I would look at something which is much more cleaner in that sense.
All right, Prakash, always get a couple of gems out of you when we discuss these themes. Cabra Extrusion is the one that you're talking about. We will monitor this as we go. With that, but request you to hang in there. We'll take a short break, come back. On the other side, we'll also track the market technicals with Jay Bala of Cash the Chaos.
Welcome back. We're once again getting to the high point of the day. The Nifty is at that 18,127 mark. You can see that pick up the spurt in the last 10 minutes or so. Adani Group stocks are higher in trade. Adani Ports, Adani Enterprises, both of them have seen a spike up. So there is some buying which is coming through in the last 40 minutes of trade. Apart from that, metals continue to get stronger. They've been strong from the start go, but now the gains are getting a little bigger and better. Tata Steel, Hindalco have now gains to the tune of close to about 6% ONGC is also higher by 2.5%. And we spoke about IT in the, just at 2:30, that how IT has seen a sustained one-way up move since morning. And now the gains on Infosys and Tech Mahindra have gotten a little better. So Infi at 2:30 was up 1%. Now it's up 1.2%, and Tech Mahindra too has seen an up move. Prakash is still with us. Prakash, you were talking about batteries, and one of the big contributors in any battery is lithium ion. And HEG has announced big plans to enter into lithium ion batteries as capex of 2,000 crore rupees. The stock is up 8% today, but it's still down 40% so far this year. I know in the last 3 years the stock has had a huge run up, but where would you stand on HEG and the plans that they've announced?
So, Rima, every time you hear these announcements, you actually get excited because there's such a lot of headroom, there's such a lot of promise in that space. But some of these companies that end up getting into this space just because they have the capital, or they could probably back it up with some capital and technology know-how. We forget the fact that there's a huge learning curve attached to that. Because if you're not in that business, it's going to be extremely difficult to be able to get into that commercial phase and be price competitive as well, right? So and remember, batteries is going to be a fairly significant part of an EV, and the entire package. This is the main piece, and if you're not competitive in terms of service quality, in terms of the deliverables, we've seen what has happened to Ola. I mean, the entire company has gone down. Ola scooters is today not talked about at all as an entity because the batteries let them down. So all of these things will matter a lot. My worry with HEG is, even last time around 5 years back, you remember when the stock was 2100 or something, they've actually done a lot of capex. They incurred some debt. And then all that debt repayment is still kind of getting a little bit of a stress. So stay away from it till they've proven themselves that yes, they are going to be a formidable player, and there is going to be viability of this new business, because it's a lot of capex and capital allocation could go wrong as well, right? I mean, it's great news that they're pouring into it, diversifying from them, but their parent business could probably start doing well if metals are going to do well. So probably the stock is today excited more because of that rather than the battery thing, is my view.
Well, in our last conversation with the management of HEG, they did allude to the fact that the first phase will bring revenues only from the start of FY25. So, it's not immediately that the benefits will come by. The revenues will be to the tune of 800 to about 1,000 odd crores. But one stock which has been a buzz all through this month actually is Nava Limited, the erstwhile Nava Bharat Ventures. They had the Zambia Corporation give them money. It was a long pending arbitration that actually came through. We spoke with the management. They said that almost $227 million worth money will come by post them paying all the other lenders, etc. And that would reduce their overseas debt by almost 50%. The stock's been on a tear ever since. In fact, as we speak, is up almost 15 odd percent, and with huge volumes backing it. Nava Limited. Prakash, do you track this, and do you have thoughts on this one?
So I did, share my view the day the management had come on a channel to share, to express share their plans in terms of this money coming into the company. All seems to be good, and that's exactly what I said, that you will see a little bit of an immediate run-up that will continue. But beyond this, the SOTP valuation for this business company has always been very complex, given the fact that it's into a lot of things. But fortunately, all those areas that it is present into, sugar, paper, metal, all of those are actually working very well. So it's probably in a sweet spot, and that's precisely what I said, that capital could go to push businesses, scale them up incrementally in the right geographies, because it also has a fairly well-spread geographical footprint. So all of that was going to very clearly work out for them. But I think the stock's done well. It's kind of discounting all the good news for the time being. And the last 1 week has told us, Mangalam, how vulnerable some of these stocks could be if things go bad. So, in good times, on a good day like this, as Prashant said, he wanted it to be 100 points up. It has delivered that. So when things go as per expectation, everything looks very good. But on certain times when things don't go well, the valuation could start looking a bit askance, and that's what I'm worried about. So if you have it, I would book profits if I had it in my portfolio. I don't, but I would recommend a fresh buy at this point in time.
Okay, thanks very much, Jay. Great to have you with us here. As always, it's a pleasure. Prakash, what did I say? I'm being told. Thank you very much. Thank you very much, Prakash, for that. Well, Jay Bala is now joining us. He's, of course, with cashthechaos.com. Jay, great to have you with us here. Thank you very much. I think we spoke late last week, and you said, you kind of opened up downsides on the Nifty, but you also said maybe we get a bit of a bounce, a small one. Is this the kind of bounce that you had imagined? And is this kind of extending a little higher than what you thought it would stop at? What's your sense in the near term for the Nifty?
Thanks for having me on the show, Prashant. Yeah, I had mentioned that, from 1700, I expected a bounce somewhere close to 18,100, and we are here at 18,100. And I probably think that, this is probably nearing the maximum for a counter-trend bounce. But if the rallies that stay below 18,345 is quite bearish for the market. And the 17,700 support that we saw, very close to the 17,800 support I had projected, is not a very strong one. So I believe the market could go back to 17,500. But the important price action that's been happening on the charts is on the monthly charts. The Nifty made new record highs in December and has got strongly rejected, and it's near the lower end of the range for the December series. And if you go back and look at 2020, 2015, 2008, they've all had similar price action, rejection from monthly highs, which are 52-week highs, and then closing near the lower third of the range have led to multi-month decline. So this is a sign of weakness for the market. So people need to be very careful here.
Jay, but the Nifty is currently trading below that 18,345 level. So are we currently in a no-trade zone?
No, the market's not going to get bullish even if it were to cross 18,345. But staying below 18,345 is a sign of quite a bit of weakness. That's the point I'm trying to make here. Even if I had projected a rally, a counter-trend bounce somewhere close to 18,100, if it goes to 18,200, 18,300, that's not going to change things. 18,345 is a short-term resistance, but a strong one. If the market falters at the very first resistance, that would send a very important message to the market.
At what point does one go short in the market? At current levels, would you wait for the rally to extend itself?
Yeah, this is one of the likely point for people to start getting short here. You can probably get positional, puts or even futures positions right here, as long as the market's below 18,345. If the market is going to drop to 17,500, that's a good risk reward. You have a 200-point risk and about 700, 800 points drop potential. So that I would say is a decent potential for somebody to make a short attempt here.
I wanted your thoughts, Jay, on the IT space. I mean, you said that 28,000 could be a bit of a place where there would be, jostling between both the bulls and bears, and two possibilities exist. Now, so far, we're 700 points above that 28,000 mark. Do you think, it is going to tilt in the favor of bulls? Your thoughts here?
See, I want the market or the Nifty IT to tilt in favor of the bulls, but the market action has not been so convincing at the moment. So if the Nifty IT index were to cross 29,500, 30,000, then it will gain a little more strength for the bullish case. But if 28K gets taken out on the lower side, that will project a very bearish picture for the medium term. And if you project a medium term or a long term trend line from 2009 low to the 2020 pandemic low, that would bring the Nifty IT index somewhere close to 21K, 21.5K. So I really don't want the Nifty IT index to break below 28K, but I'm being very cautious here. I would like to see 29,500, 30K taken out first.
Any other indices delicately poised like the IT one?
See, the banking index is slightly stronger than the Nifty, it can be argued that but the banking index hasn't turned as bearish as the Nifty. So if the banking index were to take out 43,615, then the possibly one more higher high is possible for the banking index. But if 41,569 is taken out before 43,615, it will put the banking index also firmly within the bear's grip. But if Nifty Pharma were to hold 12,500 and rally from here, it has a short-term rally potential somewhere close to 14K, something like a Torrent Pharma. But
Okay, we've lost that connection with Jay Bala, but his view is that market texture continues to remain on the downside. He's still very bearish on the markets, but he's given us some important levels to track on all of the key indices. We'll try and reconnect with him. It's 2 days to go before the series expiry as well comes to an end. This has been a very light week in terms of earnings, but we're not bereft of a lot of price action and volatility. Currently, as we speak, the Nifty is hovering above 18,100. So from in the last 30 minutes, there has been a pullback, but we're still about 20 points away from the intraday high level on the Nifty, 18,134. Jay is back with us. Jay, you were telling us why you're watching the pharma index very closely.
Yeah, that's right. The Nifty Pharma's 12,500 is a very important support. Below that, it's 12,100. But, I don't want the pharma index to weaken below 12,500. If it holds 12,500 and it rallies for the next couple of sessions, there is a rally potential for somewhere close to 13,800, 14,000. But that's only a short-term rally. But it's a sizable one for traders to participate in it. But I'm looking at something like a Torrent Pharma to be a relative outperformer here.
All right, Jay, thank you so much for joining in. And if we don't speak before, the end of the year, which is in a couple of days, wish you and your team a very happy new 2023 as well. And as we said in the morning, may the charts be with you. But before we take that short break, just keep an eye out on a couple of stocks. It is past 3 p.m. So we're seeing a 3 p.m. move on HDFC Bank as well as HDFC Limited, along with ICICI Bank as well. Now, these stocks are important primarily because, like we pointed out, it is the Fin Nifty expiry today. So if there has to be any move in that index, it would come through via these stocks itself. So the intraday chart of HDFC Bank comes up for you, still in the red, but significantly off lows. HDFC Limited has now moved to the high point of trade, and as has ICICI Bank. The other couple of stocks are Bajaj Finance and Bajaj Finserv. Both are also off lows. Bajaj Finserv actually just about breaking into the green, and Bajaj Finance already at the high point of trade. So these are a couple of stocks we are monitoring for the next 30 minutes or so. Let's take a short break, come back, and as always, we'll get you a check on what's happening in the dealing room. D Street Chatter with Nimish. We were talking about the Nifty financial expiry today. The index has moved to the high point of trade, and it's very close to the 19,000 mark, where a lot of open interest is in terms of calls. So once it crosses that, we're probably likely to see a lot more on that index as well. But it's that time of the day where we get you a wrap on what's taking place across dealing rooms. Nimesh has been speaking to a lot of them, most of them on holiday.
Not
Nimesh,
not
much of them. Okay, whoever few there are, Nimesh, what are they saying?
So again, the recovery continues for second day running, but again, the flows are muted. I guess it's all been visible on the screen as well. A big rally in the metal names on the back of the China news, so that's been a big outperforming sector today. But more like a short covering rally rather than genuine buying, because largely the FIs seems to be quite absent. There is a bit of domestic buying, but that's largely in the mid cap and small cap. So kind of NAV support, which we've been talking for the last couple of days. I guess apart from metals, the other few sectors which have participated today, cement, autos, and technology stocks, all have been contributing to some extent in today's pullback as well. From a technical point of view, the level remains the same. 18,200 is a big resistance level to watch out on the upside. So that's the level on the upside. On the downside, maybe 17,800 is a level which is like a firm support. So should be in that range for the next few days, I guess. But the good part is that there is a bit of momentum back, and there is a bit of recovery as well, not only in the indices, but in the broader markets as well.
I think in the last week of December, we should call it a retail and HNI check more than just a dealing room check, because they are the ones who are more active. We can see that in a lot of these cash stocks as well. They say, right, when the institutional cats are away, the mice play. But individual stocks, you do have a bunch of data points today.
Yes, Mangalam. So the first stock on the list today is Green Lamp. There was a large block, 1% equity had changed hands, and I believe in terms of a seller, a leading domestic mutual fund was a likely seller in today's block. So the buyer would be interesting to know. But what I understand from a seller point of view, the domestic mutual fund was a seller in today's block deal. So that's the first one. The second stock is Aether Industries. Again, one of those fresh listings of this year. Been consolidating in a narrow range of late, but now I believe the selling pressure from a leading domestic mutual fund is likely to get over very soon. They are left with hardly any shares left. So they've been a big seller, one of the domestic mutual fund, but looks like that selling is likely to get over soon. So that's the second one. And the last stock is UTI AMC. Yesterday we saw a big move in that stock, rallied 5-6% in yesterday's trade. Again, the feedback is a couple of domestic mutual funds have started accumulating the stock at these levels. So the delivery volumes are quite high for the last few days, and that's because some of the domestic mutual funds have been active buyers in UTI AMC.
Okay, those are stocks to watch out for. Nimish, thanks very much for that. Let's welcome in Mitesh, who's with us with the BTST trades. What to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, back to you. Over to you.
Prashant, I think I've chosen two metal names. Both these ferrous stocks, JSW Steel and Jindal Steel, have broken out. So they can be good BTST trades over here. 570 being the stop loss for Jindal Steel and Power, and 585, 590 is what I would look for the stock trade tomorrow. Similarly, JSW Steel, I suggest stop losses around levels of 758 and 775, 780 is the range of target for tomorrow.
Okay, thank you very much for that. Ajay Vora, fund manager at Edge, a Cat3 AIF equity fund from Nuvama Asset Management, is with us on the show now. Ajay, afternoon. Before we get to the view, just quickly tell us, what is a Cat3 AIF equity fund? What is the mandate? And therefore, how are you approaching it?
Sure. So, good afternoon and thanks for having me. So firstly, category 3 AIF funds. So there are three types of, categories within AIF, which is alternative investment funds. Within that, the category 3 is mainly, where you have access to derivatives, and broadly, the minimum ticket size over here for the investor would be 1 crore. So here you can, basically have a strategy in place whereby if you have a bullish or bearish view in the market, accordingly you can have your exposures and your strategy based on that, so as to ensure that you have, some sort of limited drawdown on the portfolio when the markets are in the corrective mode.
Okay. Now tell us, what is the market view? Near term, because you can play the derivatives market, so you can take a position even for the shorter term. So tell us the near term outlook and then, of course, the medium term.
Sure. So my sense is that, over last 2 quarters, if you have seen that, we are not yet out of the woods in terms of the global perspective. And the way we see from here on is that, if the rates are going to stay higher for longer, it will definitely have its impact on growth, more so globally and to some extent in India as well. So we all have seen, how the narratives have changed over last 2 quarters. Firstly, there was a fear of aggressive rate hikes in the first quarter, and that's how, we saw a 10% correction in market in the June quarter. And then, market took a comfort saying that, inflation is likely to cool off and rates have also peaked. And therefore, we had this 20% rally. So from now till, first half, so again, next year would be a story of 2 halves. The first half, I think the narrative that will play out is slowing growth, and therefore valuation may also contract. But the moment we'll see, growth slow down, bottoming out, again, the expectation would be that the Fed would come out and, start easing rates. So it will not happen, in the first half, maybe in the second half. And that time, we can again see a decent rally globally. But at least from now till, next 2 quarters odd, we'll see growth slowing down meaningfully globally and to some extent in India.
Right. A couple of sectors which are in focus today, and both of them are on the way up. One of them is the IT space. The other one is the metals pack. Metals, of course, comes in after some spate of underperformance, hopes that China will open up well. What are your thoughts on this place? Has the up move begun in the metal space once again? And on IT, the question is, has it bottomed out?
So on the commodities, fortunately, we have been positioned tactically in commodities since last couple of weeks. And it was, as you rightly said, it was on back of China reopening. And, this entire trade will not play out across all commodities, because we feel that, wherever China is importing, those all commodities can see an uptick. But wherever China is exporting commodities to the world, those commodities can see a downtick. So accordingly, if you look at the entire iron ore inventory position in China and many other metals as well, that is where we can see some sort of upside on back of this whole reopening. And so that was on the commodity side. On IT, we have stayed away from that sector for a while, and I think till we don't get clarity in terms of how much deeper the slowdown would be in US, I think it would be prudent to stay underweight or avoid that sector for a while. Because if you look at the numbers, the earnings have been cut by say around 10 to 12% or maybe 15% in some case. Stock prices have corrected by say 25-30%. But if the slowdown accelerates, there can be another round of earnings cut. So we would ideally stay away and keep monitoring it very closely. Next 2-3 quarters, we'll get complete clarity in terms of how the IT budgets have been shaping up from most of the customers, and that will give a lot of clarity.
Right. Sorry, Ajay, on metals, so you want to stay away, right? You said export because China, or is it about metals which China will end up exporting? Only
what,
those.
What I meant was that if you look at the ferrous side, we are positive because the inventory level there is pretty low, and that is where we had tactically positioned ourselves in the portfolio. On the long side. On the long side.
What else? Give us a little bit more color, flavor of what you're doing, Ajay.
So, Prashant, if you look at it, if the view is that, IT companies' growth is likely to, slow down, and then if you compare it with other defensive sectors, and mainly if you look at, the pharma space, you are looking at many mid-cap pharma companies, which will be growing at somewhere around 12 to 15%. And most of the mid-cap IT companies, growth will also, over next 2-3 quarters will come down to those levels. And then if you look at the relative valuation for those mid-cap pharma companies, they are looking pretty cheap. So my sense is that, there can be a decent upside in few mid-cap pharma names from here on if you have a, 1-year view, considering it's a defensive sector and, the worst of the pricing in US also, price erosion is behind us, then that can again be a very good play.
But the broad view is that in the first half of 2023, things go south from here, right? It's going to be top-down pressure. Markets correct.
Yeah, I think so.
But the second half recovery is also fraught with risk, right? The second half of the year recovery that you're penciling in is dependent on a pivot from the Fed.
Yeah, so broadly, the thing is when I say correction, you also have to take into account that, over last 2 years, if you look at FY22 and FY23 so far, FIs have sold close to $55 billion of secondary equity. And, the correction over here may not be that, sharp, but I would say that markets can remain sideways. I feel that, at 20 times FY24, because this year we'll end the Nifty earnings at somewhere close to 810. And next year we should be somewhere close to 920, 930. So basis that we are trading at close to 20 times. And that leaves limited room on the upside considering we are in a high interest rate regime. And therefore, a market may remain sideways over here. But second half, the moment, the global markets and the emerging markets start building a narrative that Fed has pivoted and, the cuts will start, that is when, we can again see a very decent rally. Because then if you are looking at FY25, you're eventually looking at, 1,050 rupees EPS for Nifty.
Well, you said that this year we can end with 10% sort of EPS gain, and the next year, basis your projections could be around 13 to 15%. Could you give us a sense of what sectors would lead that EPS gain, and understandably one should position themselves in those sectors itself?
So Mangalam, we still continue to like the private sector banks. We feel that they are still very well positioned, considering, the strong credit growth and benign asset quality. Although one may say that, the valuations are, at the mean level. But if you look at the FI ownership in this sector, what it used to be earlier, if you compare it with the current, the holdings, it has come off pretty sharply. So my sense is that as and when India starts getting fresh allocation within emerging market, private banks will attract a lot of money. And that is where, we continue to maintain a positive view. Secondly, I feel that, the way private capex has picked up in the country, and if you look at the data, it is comparable to the 2003-2008 period. And the best part about this, cycle is that it is pretty much broad. right from, steel, cement, chemicals, pharma, and many sectors, we are seeing a significant capex announcement. So the entire infra cap goods space, I understand that the large caps have, are pretty expensive right now. But I feel that, there are still quite a few pockets of opportunities in that space which can do pretty well next year. And again, in terms of ownership, not many, investors have still positioned towards this sector. And mainly, this can happen before the, the central budget election in 24. It can be a good sector to, participate.
You like pharma, steel, private banks, and you're negative on IT and auto.
Yes, exactly.
Okay. And are you taking short positions in IT and auto, or is it just an avoid?
No, it's as of now, it's just an avoid. So we are managing our risk through the indices. As of now, we are not short in that space. But any, upside from here on in these two sectors can be used to basically, go short on that.
But if the call is that markets are going to just correct sideways, if not correct, at least move sideways, then should your portfolio not be positioned for, some short, on the way down instead of only having longs?
No, so as I said that, Rima, how does this work is basically you manage your exposure. So if you look at any pure, a conventional strategy, that would always have 100% exposure on the long side. Whereas we end up managing our exposure depending on the market risk environment. And that is pretty much low right now to protect any kind of downside. So that is how the strategy works.
All right, we'll leave it there. Thank you very much. Appreciate you joining in today on the program. Thanks very much. 130 points, which means that the index is, by the way, I think if we have the Nifty up.
All-time high. I mean, not all-time high, sorry, days high.
Well, yeah, we are at the day's high. 18,147 is the day high. We are at 18,142, and which, by the way, basically takes us exactly at we are slightly about 10 points above the 18,130 level, which is the 38% retracement, and now we're bumping into that rising trend line all the way from the lows of June. Exactly there now. So this is interesting. This is turning out to be a pretty forceful day after yesterday's pretty strong bounce that we had. So let's see if we are able to take this out, close above it. That'll be something, and I think will only add to confidence that there perhaps is more to go. And yesterday was not a one-day wonder, as many were kind of pointing to earlier in the day. We'll take a break here. We are back. There's 9 minutes to go for market closing. More on the other side. Stay with us. It's a good-looking screen, 130 points, as we pointed out, 18,145. As part of our special series, Wizards of the Lal Street, BSE member Ramesh Damani caught up with Prashant Khemka, founder of White Oak Capital Management, and started by asking him about how India could become a major player in the global supply chain. They also discussed the prospects of the Indian IT sector. Let's listen in to what Prashant had to say.
Globalization is very much there for good, and it is maybe a bit of a speed breaker in the interim, but for India it's actually can be a very positive game changer of sorts, because the companies worldwide are very keen to diversify their supply chains.
From China,
from
so it's the India plus one.
Absolutely. From excessive dependence on China, they want to diversify. India has the opportunity, and it should grab it with both hands, which it is doing so, but I think there's always room to do a lot more. It's an opportunity.
So Apple does 5,000 crores of iPhone sales. That telling sign to you?
That is certainly, from India's perspective, a very big positive. The opportunity size in front of us is, compared to that, is like tens of times, if not hundreds of times bigger, if you look at the manufacturing sector as a whole. IT services, if I take as an example, from time to time, they get written off by the market. One of the things that market has for the last decade or so believed is that IT services sector is an X-growth sector in India. Because they think of, or X-growth sector, because NESCOM and IT companies, they guide in dollar terms or constant currency terms. We are like dollar equivalent. So they talk about 7 to 8% growth. Now, in India, 7 to 8% growth doesn't appeal to anyone.
Doesn't wake up anyone.
Yeah, if you are less than double digit, you are no growth or slow growth company.
Interesting commentary there coming in that conversation. But the Nifty bank has now moved closer to that 42,900 mark, which is closer to today's high. And that's primarily on account of HDFC Bank and ICICI Bank. ICICI Bank actually has now moved much higher than HDFC Bank, currently closing in towards the high point of today's trading session. And of course, all of this ties in with the fact that the Fin Nifty, or the Nifty Financial Index, is above that 19,000 mark as well, a mark which was supposed to be a bit of a resistance. And now at expiry, we're seeing a move upwards above that 19,000 mark for the Nifty Financial. Mitesh Thakkar is still with us. Mitesh, what's also picking pace right now is the cement pack. We have India Cements, which has moved to the high point of trade. Ambuja, ACC, all of them moving off the lows. Anything on the charts for that?
Actually, India Cement is something, which is very interesting. It broke below the 200 average and then has reclaimed it with very strong reversal on the hourly and the 2-hourly charts. I think there was a gap around these levels of 2 and 7, and we've just hit that level. I think once we clear that, good chance that this rally should see continuation to levels of 235 to about 236 on the upside. Ambuja has bounced back from support levels. Again, this looks like a pullback rally, but overall, I think there is still more space. 540, 545 is the range which I think we're talking.
Okay, Mitesh, thanks very much for that. Appreciate you joining in as always, and of course, we'll have you back tomorrow and chat more. I mean, the markets, by the way, hit that trend line on the Nifty. 18,140 or so is where that is, and basically it's turned around once again. The high is 18,149. But not quite taking it out, but solid day once again as we start to wrap out things. 3 minutes to close. 18,135 is where we will leave at. Let me just quickly tell you sectorally what, of course, was the strongest. Metals, top of the charts, 4% gains on the Nifty Metals Index. You had the real estate index, which was up about 1.25. The PSU Bank Index was up 1.25, and the small cap index was up 1.25% as well. Actually, except FMCG, as I said earlier, everything up. The FMCG index ending about 0.4% lower. Market breadth was positive. Not quite 4:1, but 3.5:1, which is good. And a long list of volume-led gainers today is what you had, which we will get to in just a bit. Nifty sort of stocks, the large caps, which did the best. So metals, of course, prominent plays. Hindalco, Tata Steel, JSW are the top 3 gainers between 4 and 6%. Then you had Tata Motors with a 3% gain, ONGC following with a 2.5% gain, and Asian Paints with a 1.6% gain as well. I think you had about 7 or 8 Nifty names out of 50 which were in the red. Rima.
Powerful rebound in the mid-cap space as well for the second day in a row. So today the mid-cap index was up 1%. Yesterday it was up 2.5%. So second consecutive day of good gains. Strong advanced decline ratio, 4 stocks in the green for 1 in the red. It's metals all the way even outside of the index. Nalco, Sunflag and Iron, JSPL higher in trade. PSU banks like Bank of Maharashtra, Union Bank closed with strength. FACT locked in an upper circuit of 10% today. This month it's up 100%, and Sri Renuka Sugar, in fact, the entire sugar basket had gains going for itself. And a couple of the other smaller ones like Nava Limited not locked in an upper circuit, up 15%. JBM Auto also higher in trade. On the losing side, Nectar Life Sciences, Morpen, Laurus Laboratories, where there was a fire today, so that was under pressure. Exide also down 1.3%. Mangla?
Well, in the mid-cap end of things, like you said, Rima, it was also a day of heavy metals. So among the top gainers, we had JSPL, Nalco, SAIL, Hindustan Copper, Vedanta, all of them ending anywhere between 4 to 9% higher. And the cement stocks big pace in the second half of trade in particular. We had a big move come by on India Cements from the frontline end. We did see some gains come by in Shree Cement as well. But it was all about the cash stocks today. A lot of them in action. Kitex Garments was up 13%. Sarda Energy up around 10%. Kirloskar Ferris. CCL Products was the other one which buzzed around with a fair amount of volumes, as did TTK Prestige. So in a sense, more stocks, way more stocks gaining than losing, and way more stocks in the cash end of things doing much better than the highly bid liquid FNO or frontline stocks, primarily on account of the absence of institutions. Another good day of trade. We wrap up with the Nifty closing in above 2/3 of a percent higher. The mid-cap index over 1% higher. and the Nifty Bank very close to that 42,900 mark. With that, we wrap up on this edition of Closing Bell. Thank you for watching. But you don't go anywhere, because on the other side, we have commodity champions.